So welcome back to the channel. In this video, we're taking a look at some major developments in the crypto space, Bitcoin Ordinals, the ZK EVM environment from Polygon, and a bit more. If you enjoy the content today, make sure you subscribe to the channel. So let's start with a catch up from yesterday as CPI data came in actually a bit hotter than expected. Crazy stuff. Even with the massaging of the figures, the new calculation method, it still came in a little bit higher. The estimate 6.2% comes in at 6.4%. Imagine if they hadn't massaged the figures, where the heck would that be? So this is fitting with the narrative that inflation's coming down, soft landing, all that talk. I think it is pure politics at this point with the election coming up next year. But interestingly enough to see, the markets did not react badly to this, but in fact, positively. So it kind of seems that the CPI data was what was weighing on the market quite a bit over the preceding days. And now with the print coming out, we can kind of not focus on that right now. And the markets want to continue with their upward trajectory is what it seems like. So Bitcoin currently at $22,250. It is $22,300, the kind of pivot point for this to start breaking up. And this wick low here, which is at 21.6, if we break below that, we're looking at targets down. However, if we look at the S&P 500, not a bad reaction yesterday either. As you can see, the downward trend line. We came and tagged the trend line in December, pulled back, put in a higher low, 38.33 there, a lot higher than 35.78, and now we're printing a higher high yet again, having already come back and tagged this, testing it as a support. So the S&P 500 not looking bad at all, so hard to be bearish on BTC with the stocks doing okay. And interesting enough, this is the Hang Seng Index, so this is a Chinese index, and this has pulled back over the last couple of weeks here. And during this time frame is kind of when Bitcoin had the pullback from 24s down to the low 21s. So there could be some correlation in there. We'll see if this hangs on to this kind of region here. And if the Hang Seng starts pushing up, the S&P 500 starts pushing up, the high beta asset Bitcoin here will obviously push up as well. And you can think about the implications of altcoins, even higher beta, higher risk in this environment. If things are moving upwards, we're likely to see continuation for some of these strong altcoins. Now, a little bit of macro and politics here. So Captain Rational Noah Seidman posted this just earlier. Very interesting stuff. He has some really great thoughts to actually really consider when you look through his feed. So do give him a follow. He stated this: US policy cutting off crypto access to banking rails. Total wealth of the world outside the US is 68.5%. So this in relation to the banking infrastructure being removed around the likes of Binance and potentially other banks as well, having to make concessions when it comes to providing the rails for crypto on and off ramps. So this is interesting stuff. He says with the precedence of prohibition in modern tech context, any ideas how fast this experiment is going to spread? Like wildfire, he suggests, i.e. if you have this prohibition for the emerging tech sector, crypto, typically prohibition means an outbreak for that ecosystem. He also states US domestic wealth is marginal in the global landscape. The vast majority of global wealth is outside of the US. And do you think for a second crypto markets are US markets? So this is a confusion a lot of people have had, that of course we want the US to be on board with crypto, and it helps for all the American interest out there. Most of the innovation has come from the US, with a lot of the major dApps being built by US creators. But this is just going to start to push people offshore if the US continues with these policies. It should not negatively impact crypto overall in the longer run. But of course, short term, things can happen. So this relates to his point, the impact of prohibition. It resulted in thousands of illegal drinking places known as speakeasies emerging, including at the back of barbershops and hair salons and in basements. Soon there were more speakeasies than there had been bars previous to the prohibition. In 1929, New York had 32,000 of them. So the speakeasy context, that with crypto here, a lot of crypto innovation likely to pop up if US policy continues to be hyper aggressive on the crypto market. So a very interesting take there from Mr. Captain Rational. Further to this point around stablecoins and BUSD, approximately $700 million worth of Binance US dollars have been burned by Paxos, i.e. redeemed for real dollars at this point. The supply decreased by more than 6% since Monday. The market cap of BUSD was over 16 billion. It's now around $15 billion. Interesting stuff. More on that. In terms of the reason for Paxos now halting the new minting of BUSD and giving it pretty much a 1-year time frame to wind down, it does seem that it was the fact Binance used a pegged version of BUSD to wrap it onto other chains that was the main issue. It's reported that apparently the pegged Binance US dollar was not fully backed at all times, and this is the reason for the clampdown. I jumped into the CZ Spaces yesterday. He said they will look for alternative stablecoins on Binance to trade against. I do not rule out the potential that we see a lot more BTC markets popping up for altcoins. And also he did state that they will entertain an array of different stablecoins for trading. Could that be US dollars or other currencies as well? Maybe Swiss francs, euros, yuan, you name it. It could be anything on the table here, but there will be new trading pairs coming. So this could be some bullishness around other dollar stablecoins, decentralized ones, getting a bit of an impact here on the Binance markets. We'll cover this story as it develops further. Then we have Bitcoin and Bitcoin Ordinals, a huge development in this ecosystem. And the Bitcoin Ordinals, the inscription of them, essentially kind of the minting process of these Ordinals or NFTs on the Bitcoin blocks, has established a real baseline of support for actual transaction fees on the BTC network. This is actually something that Bitcoin has lacked, another use case. As you can see, this is approaching nearly 600,000 US dollars worth of transaction fees on the Bitcoin network. This would go directly to the miners. So another source of income from miners, the NFT market on Bitcoin. Many maxis absolutely hating on this, but innovation cannot be stifled, and this is clearly on a one-way ticket here. And I've seen some crazy figures quoted online, people paying upwards of 40 Ethereum's worth, so somewhere in the region of 60,000 US dollars for some of these Ordinals. Those are big time NFT collectors on ETH moving to the BTC network. Another one of these guys, Jason A. Williams, a lot of money this dude has. What he's done is essentially burned his Ethereum-based Bored Ape Yacht Club and inscribed it onto the Bitcoin network as an ordinal. He says this has gone forever, it's done, over, not coming back to ETH. So this is a huge change in terms of another use case for Bitcoin, and the fact that NFT collectors on ETH are saying, look, Bitcoin is the original, the OG blockchain. It is definitely not going away. It is definitely not going to be labeled as a security. Gens has already made that point well known. So could this be the real true stomping ground for NFTs going forward? Crazy, crazy stuff. Ordinals or NFTs here on the Bitcoin network, definitely something to have on the radar here. This could be monumental. Now, this guy is Munib. He is the CEO of Stacks. This is essentially a layer 2 environment for Bitcoin. We have covered this previously in the last bull market as they are producing games on there. And this is clearly an opportunity for this L2 environment of Stacks. He says this, a new Bitcoin web wallet release is almost ready. It will support Ordinals, NFTs, and Bitcoin L2s along with native Bitcoin, i.e. the MetaMask for Bitcoin is almost here. For design that's beautiful, the Bitcoin web wallet. So really interesting stuff to see this kind of innovation going on the Bitcoin network off the back of this ordinal trend really picking up here. So Stacks is definitely a token to watch. It started to pick up here and is actually breaking out. So this is very, very interesting. As you'll see from the chart here, the kind of 33-cent resistance around there, it is starting to push above. And so there would be clear skies to the next kind of range, potentially as high as 50 cents there. So this is a way of getting some allocation into the ordinals without actually buying ordinals, as Stacks is the L2 environment here on Bitcoin. There was also a microcap launch called Ordinals that was listed on CoinGecko just earlier today. This is an ETH-based token. Very, very low market cap, very, very speculative, high risk. This would be the one I would suggest going into, not financial advice, if you were looking for some exposure onto the Ordinals stuff. But Ordinals there is a very high beta, high risk play in this eco. Then we also have a ZK EVM announcement here from Polygon. Polygon sets a March date for ZK EVM mainnet. The beta to go live, March 27th is the fateful date. So this has again provided more fuel to the fire for the ZK narrative, and CoinGecko have just released a zero knowledge tab on here as well. So you can just go straight to the category itself and then see all the movers and shakers. I've starred the ones I'm particularly interested in, and you can see a nice uptick here over the last 24 hours. Quite a few of these posting some good gains, bouncing off previous levels of resistance, now flipped to supports. So if we've got like this kind of next, 5 weeks in terms of the run up into the Polygon ZK EVM, maybe we'll see more trading opportunities and uptick in this specific market sector. I definitely would not write it off. The one I allocated to earlier, as I was heavily in cash going into the CPI data, I started to buy some Mute just earlier. It was down after peaking out before these, and these ones are kind of playing catch up at this point. So I think there could be a rotation back to Mute, but there's definitely some clear weekly levels on a lot of these altcoins that you could trade between. Go and check them out on various exchanges. I'll leave a link to Binance down below, where quite a few of these have great volume on them. ZK Dex is an update here. So Uniswap is getting a ZK Sync implementation, as is SushiSwap. Loopring has its own rollup and its own Dex on there. And then Mute, the one I bought earlier, is a ZK Sync native DEX with a lot of innovation going on. So I'm just going to highlight a couple things that really got my interest a little bit earlier. So within the Mute blog post on Medium, they're implementing bonds. So what you can do is bond your liquidity provider tokens, i.e. ETH, to Mute, sell them to the DAO itself, and they'll give you a discount on Mute tokens at a rate of 10%, I believe it is. So the idea behind this is to increase their overall protocol owned liquidity. This one is primarily traded on DEXs. And so if they can accumulate a load of the LP tokens, they then own the vast majority of liquidity for their pairs. This just means they have sustainable yield for the protocol forever. POL, which is protocol owned liquidity, is something that a lot of big brains in the DeFi sector have been trying to capture over the last year or so, and is definitely something that provides long-term sustainability for any protocol that implements it. So very smart of Mute to go down that route. And in addition to this, the bonding system in Mute can also be used to own liquidity for any token, not only the Mute to other token, i.e. Mute to ETH, which can be leveraged to create new trading pairs. So these guys definitely being very innovative in the space. You can see the bond sector on here. So for example, you have 10 grand's worth of the LP Mute to ETH. So you took 5K of each token, put them together to create the LP token. You would then sell it to the Mute protocol in the bond, and they would give you a 10% discount on Mute tokens. So in effect, you would get $11,000 worth of Mute after a 7-day vesting period. Definitely very interesting, and great to see regular updates coming from many of these ZK protocols as this sector hots up into the ZK EVM launch from Polygon. So I hope you enjoyed this video. Drop me a comment down below. What was your favorite part of today? Until next time, peace.